Hi everyone, and thank you for tuning in. In this video, I'm going to highlight my top dividend stocks to buy in October. Let's get right into it. The first stock that I would recommend in October is Home Depot. Home Depot's dividend per share has increased nearly sixfold from $1.16 per share in 2013 to $6.60 per share in 2022. That means if you were getting a $1,000 per year dividend in 2013, you're now getting an close to $6,000 per year dividend in 2022 if you were a Home Depot investor and you had enough shares to get that level of dividends. So robust dividend increases, that's an excellent sign for investors who are looking to generate passive income. Next, earnings per share have increased at a compound annual rate of 20% in that same time. So in that decade, earnings per share grew at a compound annual rate of 20%. Now, why is that important? Because dividends are paid out of earnings, are paid out of profits. If you don't have sufficient profits, then you cannot pay a sustainable dividend. You would eventually run out of your savings and run out of your borrowing capacity, so you couldn't continue paying that dividend. So the fact that Home Depot has grown earnings per share at 20% in the last decade means that it could continue growing its dividend at a sustainable rate because it's supported by those profits. To make the case more compelling for Home Depot is that it's near its cheapest valuation going back all the way a decade. It's trading at a price to earnings ratio of 17.17, and it only traded cheaper than that briefly for a moment right at the pandemic's onset, but you haven't been able to buy Home Depot at this price at any time going back in the last decade, barring that one moment. So excellent dividend growth, excellent profit growth at the cheapest valuation in the last decade. It's no secret why Home Depot is one of my favorite dividend stocks to buy in October. My next recommended dividend stock for October is Target. Target's dividend per share has increased from $1.32 to $3.16 from 2013 to 2022. So it's almost tripled. Not as good as Home Depot, but you know, nobody is really as good as Home Depot is in growing the dividend. It would be hard to find a company that's grown its dividend as well as Home Depot has. But Target is still very, very good at nearly triple the dividend growth. And again, like Home Depot, Target has supported its dividend increases with robust earnings growth. EPS has grown at a compound annual rate of 13% in the last decade, uh, supporting that robust dividend growth. If earnings per share continues at this rate, then the dividends per share, investors can reasonably expect the dividends per share to also increase at a similar rate over the next decade. And arguably, Target's business is in better shape coming out of the pandemic than it was going into it. The company made some excellent decisions in investing in the business, some excellent capital investments, building out its fulfillment services, the same day fulfillment services like buy online, pick up in store, buy online and drive up to a Target parking lot and have them deliver the item to you, and then buy online and have it delivered to you in the same day. Those three services have been incredibly popular with Target customers, and they've also increased profitability because all three of those fulfillment services are incredibly cheaper than the traditional method of buying online and having Target deliver it to your house in 2 days or 3 days, right? All three of those same day services are cheaper than that. It costs the company much less than that. And so Target is incredibly pleased that customers are choosing those same day options instead of choosing to have Target send the item to their home in those traditional methods. So for that reason, I expect earnings per share could be better in the next decade than they were in the previous decade. And moving on to valuation, the stock is trading at a relatively fair value. It's not cheap. It's not relatively cheap like Home Depot is, but still at 17.6, it's about the average price it's been selling for in going back all the way to 2014. So for that reason, that makes Target one of my favorite dividend stocks to buy in October. So there you have it, my two favorite dividend stocks to buy in October. Home Depot with excellent dividend growth, excellent earnings per share growth, and the cheapest valuation in a decade. And Target with also excellent dividend growth, excellent earnings growth, relatively fairly valued, but it's got excellent prospects over the next decade with those solid capital investment. So those are my two favorite dividend stocks to buy. If you've got two other dividend stocks that you like that I didn't mention, leave a comment down below. Let me know what those are. And as always, thank you for tuning in, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.